You're shopping lenders, you've got 2 or 3 quotes in front of you, and you're trying to figure out which lender to go with. It's totally reasonable, but here's the problem with how you're doing it. The problem is those rates aren't real yet. I'm Rebecca Richardson, aka the Mortgage Mentor, and here on my channel, I share everything that I know about mortgages to help you make smart real estate decisions. So if you're into that kind of thing, be sure to subscribe and let's get into it. The thing with basing your entire lender decision based off of the quote that they're giving you, who can give you the cheapest rate, is that those rates aren't real. They are illustrative of what's going on in the market right now, but rates change daily. They even change during the day. The other thing to keep in mind is you want to make sure that the person that you're getting these quotes from is being legit. Because frankly, when you don't have to lock that rate that day, most of the time you have to be under contract in order to lock your rate, they could honestly put whatever they want to on that quote. And some lenders do. So not only could the quote have possibly changed from when you got it this morning, that's not a knock on the lender, that's just the way that the market works. It also depends on how honest they're being about what they're actually able to lock and what they're actually able to give you once you're under contract. Because a lender can show you whatever rate they want to. And you can also quote rates with discount points. Discount points are going to be buying down your rate, so it might make the rate look better, but your costs are actually higher. Now, does it make sense to pay discount points? Yeah, sometimes, but it depends on how much that's costing you up front versus how much you're saving per month and how long it takes to really recoup those upfront fees. Because it might make sense if you feel like you're going to be in the home for, I don't know, the foreseeable future, 7, 10 years, something like that, or you feel pretty confident that maybe you're going to be moving on in 3 to 5. Those are two very different conversations, and just shopping off of rate, a lot of times those recoup or those recapture conversations aren't happening. It's just lowest price to blow your socks off and try to get your business that way. What you actually need to be comparing at this stage is the person and the process. Is the loan officer taking the time to explain the process to you, to explain your loan, your options, different variables, the rate strategy based off of what your unique goals are? Are they building in a little bit of a buffer in the estimate so you're not surprised at closing? I don't know about you, but I don't like surprises when it comes to my money. So a lot of times when I'm doing a quote for a client, I want to estimate a little conservatively because I'm not trying to just wow somebody with how cheap I can be. I want to make sure that they have accurate information because again, showing up at closing and all of a sudden you owe, $1,000, $2,000 more than what you expected on the front end because they cut some fees on the quote just to earn your business doesn't feel real great. Another thing to keep in mind is the lender that you're talking to, are they talking about the trade-offs between paying for a lower rate versus maybe opting for a higher rate but lower closing cost? It all comes down to your unique situation, and having these type of conversations proactively at the beginning helps to make sure that you have a really smooth and great home buying experience and that you're not having surprises at the end. The thing I want you to keep in mind is that a low quote that nobody took the time to explain to you how the money is going to work, how the process is going to work, isn't a good deal. It's just a number, and it might not even be a real number. Lenders who are cheap to work with are typically cheap for a reason. They're usually cutting service, experience, or sometimes even tech that is necessary to, again, have a smooth process. If I'm flying somewhere, I might choose to, fly one of the major airlines, because I feel fairly confident we will leave on time, everything that is within their control, but we will leave on time, arrive on time, and it's something that I can count of because I'm making other plans around it. I'm not necessarily going to go with the absolute cheapest flight that has a takeoff time that's horrible for my schedule, that, is going to be a bad experience and doesn't have the reliability that I'm looking for. Trying to decide a lender is a lot like that. When you're choosing a lender, ask better questions early. How does this particular plan work for me? What are some alternatives? Am I using my money in the best way possible? What is your stat for how your final numbers compare to what your upfront numbers are? All of those kind of things. Yes, the rate is part of the picture, but we're talking about a major financial decision, a major financial transaction. So the person that's behind it is really what matters when things get real. Hopefully you found this helpful. So as a reminder, I'm here to share everything that I know about mortgages so you can make smart real estate choices, and be sure to subscribe. I'll see you next time.